collapse and comeback. In 2005, the most powerful chipmaker on Earth was offered the contract of the century. Apple wanted a processor for a phone it hadn't even announced yet. Intel's chief executive looked at the numbers and said no. That phone became the iPhone. 2 decades later, that one word looks like the most expensive no in the history of technology. To see how far Intel fell, look at the scoreboard today. In July 2026, Nvidia, a company Intel once towered over, is worth around $4.8 trillion, the most valuable company on the planet. Intel is worth roughly $490 billion. That is a gap of about 10 to 1 between the old king of chips and the new one. For 30 years, if a computer had a brain, Intel probably made it. Intel Inside was stamped on a generation of the world's machines. So how does a company that owned the future manage to miss it not once, but 3 times? This is the story of the decade Intel lost. Rewind to the year 2000. Intel is untouchable. It makes the processors inside almost every personal computer and soon, almost every data center server. Its factories are the best in the world. Intel doesn't just design chips, it builds them. And for years no one can match how small and fast it manufactures them. That combination, design plus manufacturing under one roof, is its superpower. Rivals like AMD exist, but they live in Intel's shadow. Wall Street treats Intel like a utility. Dependable, dominant, boring in the best possible way. The trouble with sitting on top of one mountain is that you stop looking for the next one. And the next one was already forming in your pocket. Around 2005, Apple came knocking. Steve Jobs wanted a chip for a secret project, the iPhone. Apple named a price it would pay per chip, and it would not go a cent higher. Intel's chief executive, Paul Otellini, ran the math. The price Apple offered was below what Intel expected each chip to cost to make, and there was no obvious way to earn it back. So Intel passed. Years later, Otellini admitted the forecast was wrong. The real cost came in lower, and the volume was roughly 100 times bigger than anyone at Intel had imagined. In his own words, his gut had told him to say yes, and he hadn't listened. Apple took its business to chips built on a rival design called ARM, smaller and cooler, sipping battery instead of gulping it. The most important computer of the next 20 years would not have Intel inside. Here is the first twist. The iPhone wasn't a one-off miss. It was the start of a pattern. The whole world was going mobile, billions of phones, each needing chips that ran cool and lasted all day. That was ARM's territory, not Intel's. Intel tried to force its way in with a mobile chip line called Atom and poured billions into it. It barely sold. By 2016, Intel quietly canceled its phone chips altogether. An entire computing platform, the biggest in history, by sheer number of devices, grew up without them. Intel still owned the PC and the server room, but the growth, the excitement, and the next generation of engineers had all moved to devices Intel didn't power. Missing one contract is bad luck. Missing the whole platform is a strategy problem. The second problem was quieter and deadlier. Remember Intel's superpower that it built the smallest, fastest chips in the world. It lost it. Shrinking a chip is measured in nanometers, and for decades Intel led every step down. Then it hit a wall. Its move to the 10 nanometer generation ran years late. The next step, 7 nanometer, slipped again. Meanwhile, a quieter company in Taiwan, TSMC, kept its promises and pulled ahead. TSMC designs no chips of its own, it simply manufactures other companies' designs, brilliantly. Suddenly, the hottest chip firms, including Apple and Nvidia, were having TSMC build their most advanced chips, not Intel. The crown Intel had worn for 30 years, best manufacturer in the world, quietly moved to the other side of the Pacific. And it happened right before chips mattered more than ever. Then came the thing that mattered more than ever, artificial intelligence. Around 2022, AI stopped being a lab experiment and became the biggest gold rush in tech. But training AI needs a very particular chip, a GPU, first built to draw video game graphics, that happens to be brilliant at the math AI runs on. Nvidia had spent 20 years building exactly that, plus the software to run it. When demand exploded, Nvidia owned the shovels. By 2026, analysts peg its share of AI accelerators at around 80 to 90%. Intel had a data center AI chip line called Gaudi, but it never caught on at scale. By some accounts, Intel had even passed on an early chance to back OpenAI, the startup that would launch ChatGPT. Intel had spent the AI decade defending the past. Nvidia had spent it building the future. For years, the misses were hidden by the cash the old business still threw off. Then the bill came due. In 2024, Intel reported a net loss of $18.8 billion, its first annual loss since 1986. Revenue had shrunk 3 years running, down to about $53 billion. The worst wound was self-inflicted. Intel's grand plan to become a factory for hire, building chips for other companies, was burning cash. That foundry division alone lost more than $13 billion in a single year. To stop the bleeding, Intel suspended its dividend, the steady payout shareholders had relied on for decades, and prepared to cut tens of thousands of jobs. The utility stock had become a rescue case. The symbolism arrived fast. In November 2024, Intel was removed from the Dow Jones Industrial Average, the club of 30 companies meant to represent American industry after 25 years in it. The company that replaced it, Nvidia, the old king, was swapped out for the new one, on the same index, in a single announcement. Weeks later, Intel's chief executive, Pat Gelsinger, the insider brought back to fix the company, abruptly departed. In 3 years, his turnaround had not turned the company around, and the stock had lost more than half its value on his watch. Intel needed a new leader, a new story, and a great deal of money. It was about to get all three from an unlikely place. Here is the second twist. In 2025, help came from the two parties you would least expect. First, the United States government, worried that America had stopped making its most advanced chips at home, took a stake of about 10% in Intel, becoming one of its largest shareholders. Then, in September 2025, came the plot twist nobody scripted. Nvidia, the rival that had just replaced Intel on the Dow, agreed to invest $5 billion into Intel and build products together. On the news, Intel's shares jumped more than 20% in a day, its best single day in nearly 38 years. And a new chief executive, industry veteran Lip-Bu Tan, took the helm with a blunter plan. Shrink the company, stop building factories with no customers, and win back trust one chip at a time. So where does that leave Intel in the summer of 2026? Alive, and worth around $490 billion again, no small thing for a company written off as a corpse. Its comeback rests on one enormous bet, a new manufacturing process, years in the making, that has to work well enough to win back the customers who left for Taiwan. There are early signs of life outside companies testing its factories, government money in the bank. But make no mistake about the scale of the hole. The rival it turned away in 2005 built the iPhone. The rival it was swapped off the Dow for now invests in it. Intel is no longer the company the industry fears. It is the company the industry is trying to save. Intel's story isn't about one bad decision. It's about what happens when the thing that made you great, being the best factory on the biggest platform, quietly stops being the thing that matters. Apple, mobile, and AI, 3 doors, and Intel was standing at the wrong one each time. The chip king didn't lose the AI decade in a single crash. It lost it the way most giants fall, slowly, and then all at once. If you enjoyed this story, subscribe. New collapses and comebacks land 3 times a week.